Hello traders, you're welcome back to the Forex Geek channel. I especially welcome you to this particular video where we're going to be talking about the stock reversal strategy. It's an essential skill for any trader looking to catch trend changes early and avoid being caught on the wrong side of the market. Now let us just get into what a reversal is and how you can trade it with precision. Basically, a stock reversal happens when the current trend loses momentum and the price direction shifts. So it could be the end of a strong rally or the bottom of a prolonged downtrend, like what we see happened here, right? This was an uptrend. This was the end of the uptrend, right? And this was the start of a downtrend. Okay? So basically, it could be the top of an uptrend or at the bottom of a downtrend that the reversal will start. Okay? So instead of chasing trends, reversal trading focuses on entering right when the market pivots. But these reversals don't come out of nowhere. Okay? They show up through signs if you know what to look for. The first step in a solid stock reversal strategy is spotting trend exhaustion. Okay? In an uptrend, lower highs or a break of key support level can signal weakness. For example, you will notice that we were having higher highs and higher lows here, right? Look at it closely. Although at this point, it was as if the bullish trend was already getting weak because we are having more like an ascending wedge pattern here. We had a breakout to the downside, but this support held. Can you see that? This support held. Now we had a rejection to the upside. Bullish momentum intensified. And then price got to this resistance and got rejected. Now, ideally, in a bullish trend, we ought to have higher highs and higher lows. But guess what? Price came down back and retested this same low. So this already signals there was an exhaustion in the bullish move. The bullish move was already getting weak. So if you are in a buy trend, you should just be looking for opportunity to exit. So as the price retested this trend line, as the price retested this particular resistance, it would have been a good opportunity to exit your buy. As price got here, it would have been an opportunity. Maybe you had entered your buy trade around here, or maybe around here after this pullback. As price retested this trend line or this resistance, it would have been a good opportunity to exit your buy because the bullish move was already exhausted. And guess what? After a while, we had a bearish reversal. Okay? In the downtrend, higher lows or a failure to make new lows can indicate potential upside. So these price structure shifts are your first warning signs. Candlestick formations like double tops, double bottoms, engulfing patterns, or pin bars add weight to the idea that a reversal might be underway. The next is volume. A reversal pattern backed by strong volume is much more trustworthy. So you can decide to add volume indicators to the chart. When you have an increase in volume, when a reversal is about to happen, it could indicate a valid reversal pattern. Okay? If a downtrend suddenly flips into an upward breakout on increased volume, that tells you the market is supporting the change. Conversely, a failed reversal on weak volume, that's a trap. So you might want to avoid that. Okay? Now, also, indicators help strengthen your conviction. All right? You can use RSI to spot divergence, for example. Right? That is when price is making new highs, but RSI is making lower highs. Let's see if we can find such an example here. Okay, you can see that here price was making new highs, right? But at this particular point, well, RSI made, I think this is a very gentle slope of lower high. Although the reversal did not last for long, but at least we had a reversal to the downside. You can see that there was actually a change of character here as price broke below this low and got all the way to this point. So if you had entered a sell after this bearish divergence was spotted, you would have at least caught some pips all the way down to this point. Now, MACD is another excellent tool. That's the moving average convergence divergence. Is another excellent tool. You know, a crossover of the MACD line over the signal line, especially below the zero line, can confirm an upcoming bullish reversal, right? So do not also ignore support and resistance zones. When price approaches these zones and fails to break through, it builds a case for a turn. Multiple rejections increase the probability. Timing is everything. Do not rush into the first candle that looks different, okay? Wait for confirmation, a retest of the reversal zone, right? Or a break and close beyond the key level. So if you're about to have a reversal, for example, what we had happen here, do not just jump into the trade once the first bearish candle forms, because at that time you won't know if it's a reversal. So instead of jumping into the trade, wait for a retest, wait for a confirmation. There should be a break of structure. There should be something that tells you that this is a reversal that is about to happen. For example, you can use your trend lines. Initially, we might be having higher highs and higher lows. But when lower highs and lower lows start to form, then you know there is a reversal that is happening. Because you can see that's what happened here, right? Lower highs and lower lows began to form. So wait for a reversal, wait for a breakout from the support, and then wait for a retest. After that retest, you get your confirmation candlestick and you can go ahead to enter your sell trade. If it's a bearish reversal, obviously. You place your trade, know where your stop loss goes, just beyond the recent high. That is for a sell, or below the recent low if it's a buy trade. And then define your risk to reward ratio before you hit the buy or sell button. Okay? I recommend a risk to reward ratio of 1:2 minimum. Trading reversals is about reading the story behind the chart. When trends weaken, the early signs are there. Structure changes, volume spikes, indicator divergence, and all of that. So if you can piece those clues together, you've got a powerful stock reversal strategy in your arsenal. If this breakdown helped you see reversals more clearly, hit that like button. Make sure to subscribe for more deep dives like this and comment below. What is your go-to reversal indicator? I look forward to seeing you in the next video. Happy trading.